Yeah, so my positioning is mostly neutral. I have a very tiny like pinky finger in the short side of Bitcoin up here, just in case it fails. If it pops up, I will go heavily short around that 48 to 50 level. But remember, folks, I'm a swing trader, so I'm in and out in a few days to a week or so. Where I am now on shorting it there, in a year from now, I probably will be long because I am a longer term bull on Bitcoin. It's just I'm going to play the interim levels in between. But right now, you look for that one final breakout here above 38, maybe a pop as high as 45 to 48. And then again, once that news out and you get that pop, I think honestly, you either trim back positions or you look to the short side.
Welcome back, everybody. I'm currently traveling, hence the different background. I'm in a hotel room, but we'll be talking with Gareth Soloway today about Bitcoin, stocks, and the economy. Gareth is the chief market strategist at InTheMoneyStocks.com and the president of Verified Investing Education. Bitcoin is up more than 40% since September. The S&P 500 is up 19% year to date, but big Wall Street banks like Goldman Sachs still believe that there is more room to climb. I believe Goldman Sachs is predicting the index will rise another 3.3% to 4,700 points by the end of the year. The S&P is already trading at 22 times PE, so that's higher than historical averages. I'm using the Financial Times as my news source for markets. They're a trustworthy source, so definitely check them out and subscribe to the FT in the link down below with just $1 a month. Gareth, welcome back. Good to see you as always.
Hey, thanks, David. It's so good to see you, buddy.
We have to announce that I'll be appearing on your network next week, so people need to tune in to Verified Investing Education. I'll be doing a series with you there. It'll be a fun experience coming down to see you in Florida in person. Where can we follow that channel, by the way?
Just go to YouTube. YouTube Verified Investing on YouTube is a great place, or on Twitter. And then just come to the website, the website verifiedinvesting.com. But yeah, it's going to be exciting to have you in office here in our studio. We're going to shoot some good content, maybe some stuff outside of the box. I'm going to throw some curveballs at you, David. So people need to tune in and see what these are.
Yeah, this is going to be unscripted, so I'm a little bit nervous. I don't know what's going to happen, but I'm excited nonetheless. You know what's also exciting is the markets. Let's start with Bitcoin first. We spoke early October, just before the big rally. It literally started the week after we spoke. Since then, now it's like trailing at around $37,000. I remember we spoke earlier this summer. We mentioned that your level to watch for, I believe, is $35,000 coin. So tell us what's going on right now. Is this is this new level a bullish indicator for you, or not so much?
Yeah, so here was the key, right? Is if you look at this level down here on the charts, and again, if we extend this out, basically what we were doing is looking at this. It really was around 31 to 32,000, and we kept on bubbling against it. Now, going back to the bull market of Bitcoin, this was the push above, and then it retested. Then it broke above. We went to that 65,000 level. We came back, retested that same level again, 31,000, give or take. We then ran up again. We came down and kind of kissed it, and then finally broke lower. So what that means is this was support, right? It kept on hitting and bouncing off of it. Once we broke below it, it became resistance, right? So ultimately, once we came back up, resistance pulls back, resistance and hammers a bunch of times, pulls back, and then the breakout occurred. And what I did was, once this breakout occurred, you have to think that there's further upside on Bitcoin. And Bitcoin went to my next level here around 38,000. It's established itself. Just zooming out, you can see. And again, I'm going to erase this one line. So basically, this little underbelly area here to here, that's where we've stalled out in the current price action. And look at what's created here. And I love charts. You guys know those of you that follow me and follow David, I'm all about the charts, all about the data. The data speaks to me. It's not my personal opinion. It is what it is. So you could see if we connect all the lows of Bitcoin here, you notice how Bitcoin keeps on hammering on this upsloping trend line. Same thing on the top. It keeps hitting the top, pulling back, pulling back. Here it pierced about a week ago, pulled back. Yesterday it pierced, pulled back. And today again it pierced and pulled back, the 38,000 level. So what this is telling me is if we can get a daily close above 38,000, you should get your next leg up on Bitcoin. On the other side, if we break below 36.5, 36.3, you then have to be cautious. Now, overall, I look at probabilities. And when you have a flat top with an upsloping trend line, probabilities favor further upside, maybe by about a 75 to 70% margin. So again, right now, even though it's struggling to break out, you do go in that favor. That's the angle that you would expect it. But just be aware, if it breaks 36.3, 36.5, that would be where warning signs would start to appear.
Are you surprised that the big run up or the breakout in mid-October, the third week of October, wasn't immediately followed by a pullback? In fact, like you mentioned, it just consolidated upward for the
Yeah,
remainder of the
but I
month.
think in all fairness, it made a lot of sense in that there was so much hype over this spot ETF, right? We heard about the filings. I mean, there were just so many filings from different big institutions about Bitcoin ETFs that essentially it just created this grind higher. Shorts were too scared to short, longs just kind of continued to accumulate. The idea is, again, some of these bigger BlackRock players are probably already accumulating. So all of that combined, I think, kind of makes sense why it's continued to grind higher. My big fear is this, and I'll give you the one case where I think this is the likely outcome. I think we're going to get the approval of the spot ETF. You're going to see this monstrous 1-day big pop candle, and then I think that puts in a short-term top, and I think we actually sell off to the low 30s again following that announcement. So again, there's been so much buying going into it. It's almost like buy the rumor, and then the likely scenario, and we see this in stocks, is sell the news, and I think that's very possible on Bitcoin.
But if the price already moved up on this expectation, then wouldn't it already be priced in? Like, why would we have another pop, even if it gets
Well,
approved?
so the pop, right? So this is the algos. The algos will buy the headline news just like they do with stocks. And there's going to be a certain amount of retail crowd that get the news and they're like, holy cow, I had, a couple thousand left in my account. I was already in, but I just got to buy this news as well. So it creates that initial pop. Just like in all fairness, like remember Nvidia reported earnings a couple quarters ago, it pushed up to $520 and then it came back in the day after that happened. And so I kind of expect the same sort of thing to occur with Bitcoin.
I'm just listening to this and I'm thinking, okay, as somebody who wants to learn about trading, I'm thinking, well, isn't this just an easy trade then? If it's expected that this thing is going to go through, the approval is going to go through, and like you said, we're going to get a 1-day pop. Wouldn't I just buy now, wait for that 1 or 2-day pop, and then sell as soon as the news comes out?
So, yes, if you can guarantee 100% that it goes according to plan, then absolutely. But I've been burned way too many times in my trading career thinking something is a no-brainer. And then usually when I think that way, that's when it's not. So, like, there's still hurdles, right? I mean, could the government get involved with regulation? Could they postpone? Could the SEC say, hey, listen, there's stuff going on with Binance. We have to delay the ETF, right? There's too many variables to kind of get 100%. And there's no such thing as 100%. And so considering Bitcoin's up, just in the last few months, about what, 30, 40%, I can't jump on board now just for a 1-day pop that may likely happen, but may not happen as well.
So what would be the appropriate play then, given what you've said? So there's a 70% chance of momentum sustaining on the upside. There's a higher than, I would say, 50% chance of this passing at some point in the
Yep.
foreseeable future. Like you said, the SEC might postpone it, like they already did once already. So a lot of variables in the way, but things are looking good for the upside probabilities. But you still
Yep.
want to hedge a little bit on the downside. So how would you play this?
Well, I think there's a couple ways. So number one, if those of you out there watching already have positions in Bitcoin from lower levels, then I think you just leave it be, right? You're kind of protected. You're in the money at this point. Let's say you bought in at 30 or 31 or 25. You just kind of do its thing. I wouldn't suggest chasing at these levels for a 1-day pop that likely will happen, but may not happen, right? You don't want to change your overall average to be worse. Now, what I'm going to actually do is likely if we get that big, what they call a God candle, I'll actually look to probably short into it. So if we get up to 45 or 48, there's a big level at 48, like a max move level at 48. I'll probably actually take a little bit of a short on that side and look for that pullback and then cover on a pullback on that move.
Prior to the last time we spoke, which is early October, Bitcoin and the NASDAQ still held a pretty consistent correlation. That kind of diverged for a bit when Bitcoin shot up straight to the moon and the NASDAQ didn't do that. Can we just pull up a chart or maybe two charts showing Bitcoin and the stock market side by side, just to illustrate the point that this correlation didn't hold perfectly? And I'm curious to know how you as a trader would interpret such a divergence at this time.
Yeah, so basically here you have the let's go to the daily chart of Bitcoin, and I'm side by side the S&P 500 chart. And what you did see, in all fairness, is while the S&P was selling off here, Bitcoin was bottoming and rallying back to the upside. Now, interestingly enough, notice the latest move in Bitcoin is coordinated with the risk-on move in the S&P 500. So I do also think that some of the upside, I mean, we've seen altcoins rally tremendously in the last month. I do think that's partially to blame for risk-on. Everyone is risk-on. It seems like the Fed is engineering this magical, perfect landing. Inflation's coming in. They could start cutting rates next year. I know we'll probably talk about that in a minute, but ultimately that latest move is correlated. This last move was not. And I think part of that, again, is when you get news specific on an asset that, again, the market cap of Bitcoin is not even as big as Amazon, right? So you have to say that news can directly influence it, and it can make it diverge from the S&P 500 for periods of time before it reverts back to that kind of risk asset.
Yeah, I wanted to ask you about risk on appetite, but let's finish off on Bitcoin first. So, Bitcoin bottom line, what is your play right now? What's your positioning at these current levels?
Yeah, so my positioning is mostly neutral. I have a very tiny, like pinky finger in the short side of Bitcoin up here, just in case it fails. If it pops up, I will go heavily short around that 48 to 50 level. But remember, folks, I'm a swing trader, so I'm in and out in a few days to a week or so. Where I am now on shorting it there, in a year from now, I probably will be long because I am a longer term bull on Bitcoin. It's just I'm going to play the interim levels in between. But right now, you look for that one final breakout here above 38, maybe a pop as high as 45 to 48. And then again, once that news out and you get that pop, I think honestly, you either trim back positions or you look to the short side.
I've talked to you a lot about Bitcoin throughout this year. Would it be fair to say, because you sound a little bit less bearish than earlier in the year, would it be fair to say you're a little bit, I would say, less bearish, more neutral on Bitcoin?
That's correct. Absolutely. So one of the things to kind of keep in mind is that I'm very much level driven, right? And so once we broke above 30, 31, 32, now on a retrace, I actually look to buy it at that level. So this was resistance here. If we pull back into it, it becomes support. And so again, as a technician, it's all about the charts. The charts tell me what to do. I don't tell the charts what to do. Now, I will say this, we've talked about my downside targets of maybe back to 15,700, maybe 12, maybe 10. There is one scenario that can still happen, and that's if we get a major equity sell-off. So if the NASDAQ, for instance, dumps 50%, let's say we go into a much worse recession, inflation is still high, the Fed can't lower rates as much as the markets need them to, and equities really collapse, then I do think the risk-off trade does ultimately kill Bitcoin down to that lower 15, 12, 10 level, and that's the one scenario it could happen. Otherwise, honestly, I think the 15,700 level, if that doesn't happen, holds and is the low.
Okay, so that's no longer your base case then.
Right, correct. No longer the base case.
All right. Well, let's go over your base case for equities then, given that you think Bitcoin is going to be tied to the equities performance going into next year, like you just said. So, well, before that, let's recap what happened in the last couple of weeks. So, this risk-on appetite you mentioned. What exactly happened there? Was it a reaction to the Fed being, I guess, dovish, if you want to call them dovish? Was it a reaction to an expectation of a soft landing? Certainly, if you look at the CME Fed Watch tool, no one is expecting another rate hike. Perhaps that's what the stock markets are reacting to.
Yeah, so I think that's what it is we got some comments yesterday from Fed President Waller, that was very, very bullish in terms of them likely cutting interest rates by next year. And again, the markets loved that. Today, we got some a little bit more hawkish comments, which are sending the S&P down a little bit. And we can see the S&P continues to sell off here to the downside, kind of giving up those early gains. So again, this is a market that, to be honest, I even said this to my traders today. I'm like, what's the point of having 10 Fed speeches this week? We have Jerome Powell Friday, and, yesterday there were like 5 speeches. Today, there's like 3 to 5. And it ultimately seems like it's just whipping the markets back and forth between one's dovish, one's hawkish. But ultimately, again, the markets have rallied higher substantially, risk on the idea the Fed is done hiking and the next move is rate cuts by latest mid of 2024.
Mid 2024. Okay, yeah, I saw some probabilities of a cut by as early as March. What do you think is going to happen to interest rates? Do you buy the expect? Are you in line with consensus expectations of a cut by mid 2024?
Yeah, I am. I am. I really am at this point. So again, one of the things I think is important to recognize is that, the economy is weakening. I highlighted yesterday, luxury watch sales
Yeah,
prices
I
are
saw
down
that.
37%, or new home sales down 18% year over year. So far, the jobs numbers haven't cracked yet. We've still seen jobless claims super low, but at some point, and usually that's the last thing to crack. Once that cracks, it's like a waterfall. And I always remind people of this. And I traded through 07, 08, 09, is that economic data was strong, 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 then ever so slightly weaker, ever so slightly weaker, and then it fell off a cliff. And that seems to be the way it works in these cycles. And so we have to look for that slightly weaker jobs numbers for a couple months and then watch out right after that. Also, keep in mind, it's technically historically not until the yield curve uninverts that the recession hits, and we still haven't seen that uninversion yet.
Okay, well, I guess the good news for consumers is that you nor most people are expecting a rate hike or more hikes, so interest rates will get more expensive for people. Is that accurate to say?
Well, so I don't expect any more hikes. In fact, we can see from the 10-year yield, and I can bring up the chart right here. The 10-year yield has come off the 5% level quite substantially. And I do think that overall, per the daily chart, there's a little bit more downside. I think we're still headed to the low fours, kind of right around 4 or 4.10 on the 10-year. But once we get there, I do expect it to stabilize. And I think that the Fed right now and everyone is so jovial that they think inflation is going to be back to 2% or under. I don't think that's going to happen. And I've been on record all year saying we'll get down to like 3, maybe 2.5. But I don't think this inflation bug is going back in the jar. And I think you're going to see that the markets, that's going to be the struggle in mid to late 2024. The markets will have a freak out when we do hit a recession and inflation is still elevated above what the Fed wants at 2.5% or so inflation numbers. So again, that's my kind of bear case for 2024, is that when we do hit the recession, can the Fed cut rates enough to justify the market going higher? Or do we freak out and say, oh my goodness, they can't get us out of this recession because they can't lower rates enough? And then we again see equities fall dramatically.
Yeah. Well, if they cut rates, would that signal a sell-off? Sorry, would that signal a lack of confidence in the economy, hence causing a sell-off in the equities? Could that actually be the trigger for a sell-off, a rate cut?
Yeah. Yeah, and that's the historically, again, and this is all about data, folks. For those of you out there watching and listening, is that historically, if you look at when the Fed cuts rates in the beginning of a cycle, it actually usually creates further selling in the markets. And the idea behind that is just psychological, in that when people see the Fed cutting rates, they say, "Holy cow, things must really be bad if the Fed is going to these measures." And they also say, and this happened on the way up, by the way, they say, "Oh my goodness, the Fed's not acting aggressively enough for the horrible economic numbers we're seeing, and they're going to be behind the curve like they are almost in every cycle, and therefore we have to get out of the markets, we have to sell stocks, because again, that is a situation where things are going to get way worse and the Fed's not acting aggressively enough."
So, Gareth, let's just assume there's going to be a soft landing next year. I'm not saying there will be, but let's just assume everything's going to be fine and the Fed doesn't need to cut rates or hike, so move rates either way. Do you think then that 5% will be the new normal, the new 0% that we were used to seeing in the last decade?
I think over the longer term, yes, but I do think that in 2024, inflation will be at a low enough level where the Fed feels that they can reduce rates right now from the 5.5% back to probably about 4% or so. But I think what's going to happen, and again, this is me speculating on the economic factors, is that if they reduce interest rates and make money more available, you're going to see inflation roar back. And we saw this in the 70s, and history is a good guide of what can happen. And what you'll end up having is inflation roaring up, and then they'll have to push rates back to 5 or even above 5%. So in the longer term, yes, I think a new normal is here. People have to get used to 5%, but there will be adjustments that the Fed tries to do that will ultimately backfire and create more inflation.
Okay. The last chart I want to ask you about is the DXY. Huge moves, very volatile the last couple 2 months. Is this following the 10-year? Is that what's going on?
Yeah, so it is partially following the 10-year. And the concept here is that as the 10-year falls, it means that the Fed monetary policy is going to be looser. They're going to be more likely to making money and printing money, making it available. And therefore, the more money in the system, the weaker the US dollar can fall or become. And I also think that part of the reasoning here is that we're starting to get more confidence on a global basis as well. And so the dollar serves as a run for safety currency when things look really bad. Well, yeah, China's still doing rough, but they're stimulating. We're seeing other countries like maybe Europe starting to do a little bit better. And that means that there doesn't need to be as much money in the safety of the US dollar. And last thing I'll mention is these treasury auctions. There was another auction yesterday that was not great. So other countries are also not necessarily loving to buy the US debt anymore like they used to. And I also think that that puts pressure on the dollar as a reserve currency. So it's a multi-pronged factor here, but definitely it is, as of now, following the yields in terms of coming lower.
Sorry, what do you mean the auction was not great? What did you mean by that?
Well, I believe it was a 7-year auction, and basically the demand for it, they actually had to offer a slightly higher interest rate on those bonds, the sale of bonds to get other players to buy US debt. And so we've been seeing that more and more. There's been a little reprieve here and there as interest rates have come back in, but ultimately that's something that I'm now watching on a daily basis. When these auctions go off, investors have to pay attention because it does, like, if you see people just not willing to buy the US debt at all, interest rates will have to go back up to compensate and lure people into buying our debt. So these auctions used to be a non-event. Now that inflation is an issue, now that the US debt is an issue, it becomes a big thing every single auction that goes off by the US government.
Okay. All right, well, let's end today's session here. I'm not going to ask you to give us your prediction for 2024's best or worst assets. So basically your highest or lowest conviction plays for the next year. I'm going to save that question for next week when I'm on the Verified Investing Network. I will ask you that question in a couple of days. I'll give you a couple of days. I'll give you the weekend to think about it, Gareth. So I'm going to
ask. I appreciate that because I'm gonna prepare some good stuff, buddy. You're gonna be in office here, man, and I'm gonna be ready to be grilled by you, and I think we'll have some fun, man. We'll definitely have some fun.
Yeah, it'll be some mutual grilling, I'm sure. So yeah, stay tuned for next week's show on the Verified Investing Network channel. If you want to hear Gareth's take on what's going to do the best in 2024. I believe this year you had called for gold, right? Is that what you said for this year?
I did call for gold to be the best performing asset, and certainly versus Bitcoin, that is not. It's performed relatively well compared to the S&P, but even to the S&P, I think it's underperformed. But I continue to think that in terms of risk versus reward, gold looks freaking good, man. And by the way, I'm gonna do an interview when you're in studio. It's my studio. I'm gonna interview you.
Okay, I'll prepare some thoughts then. Thank you, Gareth. So stay tuned for Gareth's thoughts next week on 2024's best assets. Appreciate your time today. Thank you.